Defying the stereotypes, breaking the rules. You can't tell me what is for me. Yeah. You got a lot more behind those pretty eyes, but you gotta let the world see. Yeah. So shake it out. Now is the time while you're waiting. You're good enough. Now is the time while you're waiting. What are you waiting on? Don't let them bring you down. If they ain't rocking with you, so what? Yeah, you're gonna be cool without them. Don't let them bring you down. If they ain't rocking with you, so what? Yeah, you're gonna be cool without them. Oh, don't let them bring you down. Don't let them bring you down. Oh.
Welcome to the Retirement Learning Lab, where we teach you how to retire without running out of money. My name is Van Richards, and this is the NASDAQ market update for August the 25th. Thank you for joining us today. We have a couple of interesting stocks to talk about today. So let's go ahead and get right into it today. Even though the market was up, you'll see how that affected everything as we go through all of the stocks that we're going to talk about today. So let's get started and bring it right on up here. The two stocks that we're going to talk about today are going to be Checkpoint Software and Charter Communication. It's interesting, you know some of these different companies. Checkpoint Software, you might not be as familiar with, but they're a cybersecurity firm that's helping to keep a lot of the information safe. They're quite large. They're based in Tel Aviv. Charter Communications, you may know as a cable provider that's called Spectrum. And it was a roll-up of Time Warner and a couple of other companies. But as we look and see how they ended up for the day, this was the day with these two stocks and the NASDAQ 100. One of the big things that we're trying to do here is to show you how all these stocks are progressing in comparison to the NASDAQ 100. The NASDAQ 100, remember, are the 100 largest companies that exist. So let's see what we can do here. I keep getting a pop-up here. I want to make sure that I'm getting everything right. Ah, there we go. One of our streams was not going live. So let's get back to what we were talking about here. The NASDAQ 100 is the green line that you're going to see. Remember, that's the 100 largest stocks that are in the NASDAQ. The NASDAQ is an electronic exchange that has about 3,500 different stocks that are in it. The two stocks that we're talking about today are represented in the blue and the red. Okay, and as we look at Checkpoint and Charter, we compared it just for one day. And you can't really tell a lot by looking at a stock on one particular day. What we want to do is go back and look at these two different stocks in comparison to the NASDAQ 100 over the past 6 months. So you can see how the coronavirus market crash impacted these stocks and how they have progressed with the average NASDAQ market over the past 6 months. So if you follow the dancing cursor, you'll see where we were back in February and March and how we have progressed till now. Now, it's really interesting because if you look at the green line, that's the NASDAQ. And the green line has a lot of tech stocks that are in it, like the Apples, the Facebook, the Amazons, the Google. This is all the companies that are pushing forward. But you also have other companies that are tagging along with those big stocks, like Charter Communications and like Checkpoint Software Technologies. And you're going to see actually that the two companies that we're talking about today, even though they are large companies. They're obviously not as large as the $2 trillion Apple that's out there, but you're going to see that they do have some individual characteristics. And when we blend all that together, that's how we get the NASDAQ 100. You can see that it had a difference in volatility in some different areas. Let's go on and look and see what it did for the day. Checkpoint Software ended the day down 1.42%. And if you're not familiar with it, Checkpoint Software is a cybersecurity vendor. They have online services, which are cloud-based services. They have software services also, and they're based in Tel Aviv. Now, that's an interesting fact because when we start looking at the insiders in the company, we can't really tell anything since it is a company that's based outside the United States. Other than maybe what news reports are, they don't have the same filing requirements that companies that are based in the United States do. I've used another factor in there that we're going to talk about in just a moment. When we look at the valuation of this particular stock, it's interesting because Morningstar rates them as a 3-star. And I think that if you follow me on a day-to-day basis, you're going to start to understand better how the star ratings work for Morningstar. It's not like it's a popularity contest. It actually is based on specific facts. And I like the stocks that are analyzed by real human beings because you're going to see that they actually do put some extra in there, a little bit of lagniappe that helps everything work forward so you can see how the stock's working and progressing in its value. In this particular stock, you see that they closed today at 127.84, and the fair market value that Morningstar is projecting on this particular stock is $127. So when you have a stock that is trading very close to what its fair market value is projected to be, they're going to rate it as a 3-star. If it goes over top of the value significantly, it's going to go down in stars. It'll go maybe to a 2-star or even a 1-star if it goes up significantly. If the stock actually goes under the fair market value, you're going to see the star rating go up. Now, how do they come up with the star rating? This is just a little bit of education. It'll help you understand how these work going forward. If we look at it, now I'm going to use a little bit of technical information here, and I don't expect you to just hang on for a minute. I think you'll get an understanding. Some of the analysts that are out there may give you numbers and say the fair market value of this stock is based on whatever. They may give you a gut feeling. They may give you an analytical number. When we look at the Morningstar numbers, they base it off of earnings per share. Actually, they call it EBITDA, earnings before interest, taxes, depreciation, and amortization. They take that number, which is about $8 per share, and they multiply it times a multiple of 15, and that's how they come up with the number of $127 per share. And they stick with that from that standpoint based on a real factor, a real number, which is basically a type of earnings per share. So it's just not something that they're pulling out of the sky. And I think that's real important to know when we're talking about stocks. Also, when we talk about stocks, we talk about their profitability going forward, and we use a term called a moat. Now, a moat describes the sustainable profitability. If you have a wide moat, then you have a lot of sustainable profitability. I can't say that word today. If you don't have a lot of profitability margin, then you're going to have a narrow moat. I like to describe it like this. Watch and you'll see. You see that the wide moat has a lot of room for profitability. They can basically hold off the competitors pretty well. If they have a narrow moat, then that narrow moat means that they don't have as much to guard against losses in profitability. And when we look at this company, one of the things about Checkpoint is it's a sticky business. Now, let me explain to you what I mean by that. A sticky business it means that it's difficult to switch. It's difficult to switch because of the logistics that are involved or the risk that might be involved. And when we're talking about a company like a cybersecurity company, switching makes a big difference from the standpoint of being vulnerable to cybersecurity threats. So switching cost is one thing. Another thing that's making this a continuing profitable business is the fact that there's growing cyber threats. It's interesting, when more people started staying at home, we saw a lot more cybersecurity threats. And I think one of the reasons was, we're on our home computers or we're on our home networks. We don't have the benefit of the infrastructure of an office where a lot of working. So you remember when Zoom started being more popular at the beginning of the pandemic, there were Zoom bombs that were going on where people were actually Zooming in and interrupting Zoom meetings. So cybersecurity has become more important as the pandemic has drawn on and more people are sensitive about their data and they're broadcasting from different locations. So that makes a big difference. Another thing that Checkpoint Software has going for it is they are very good at controlling their expenses. So we have controlled expenses too. That's a little bit of a drawback in a way, because when you compare them to competitors, they're not doing as much research and development. So that's something to keep in mind as we look at this going forward. Okay, so when we look at this particular, talk about the risk of it just a little bit, because when I throw up the spaghetti graph that's shown here, you're going to see this. Looks like we're back. Okay. Sorry about that little break and interruption there. Who knows? Maybe we have a cybersecurity threat and we need to use Checkpoint Software Technologies. Okay, let's talk about the volatility that's associated with these stocks. One of the ways that we measure volatility is based on beta. Beta is the volatility based off of the Standard & Poor's 500. If you have a beta of 1, then you have a beta that you have the risk, you have the same volatility as the Standard & Poor's 500. If you have a number that's less than 1, reportedly, supposedly, you will have a volatility that is going to be less than the Standard & Poor's 500. Now, this is where I think that you need to have someone that can help you out and look at your different investments and tell you how volatile that they might be and show you how this works. This is the reason why. When we look at Checkpoint Software Technologies, they actually have a beta that's less than 1, which should tell you that this stock is going to be less volatile than the S&P 500. But let's look at the spaghetti graph and actually see what happens. When we look at the actual graph, you can see that the S&P 500 is in red. You can see that Checkpoint Software Technologies is in blue. Which one looks more volatile to you? Which one looks like that it's going up and down more? Well, to me, it looks like Checkpoint Software is actually much more volatile than the Standard & Poor's 500. This is a case where you really need to look at the actual graph of the investment and compare it to the numbers, because I don't believe that these match up. Either there's an error in reporting or there's an error in the way that it's recorded, because this stock is obviously more volatile than the Standard & Poor's 500. So the lesson to learn here is, if you get numbers, sometimes you need to verify those numbers to trust. We're talking about people that work at the company and are actually investing in the company. Now, remember before when we talked about Checkpoint Technologies, they're a Tel Aviv company, so they don't have the same reporting requirements as companies that are here in the United States. And when we get to Charter Communications, there's a lot of big news to look at there. But in this particular company, I wanted to see what is the inside of the company like from working there. Do people have a lot of faith in working with the company? And I tell you what, I think I found something that'll help us to understand what this company is like. There is a filing which is made with the Securities and Exchange Commission. Yeah, I've thrown it up here. And the big news to take out of this is they have created an employee stock purchase plan just recently, and they're putting over 1 million shares into that so that employees can buy into it. Now, if you're an employee that works for Checkpoint Technologies inside the United States, I think you're just out of luck because they're not making it available to employees outside of, I believe, outside of Israel. But that may be inside the United States. Don't quote me on that, so I might not be 100% correct. But I think the good thing to see is that it's becoming an employee-owned company. Employee-owned companies traditionally have a good history from that standpoint. Labor relations are very good, usually because the owners of the company are working for the company. Okay. Now, I talk about dividends too, and I'll be real short here because there's nothing to report. There are no dividends with this company. So if you're a retiree looking for dividends, this is not a stock that you would be interested in. If you are a retiree and you're looking for growth, then yes, this might be a stock that you would be interested in. Now, let me take just a real quick moment and explain something to you. The name of the show is the Retirement Learning Lab, and I always tell people that we help people to retire without running out of money. So we talk a lot about stocks. What does stocks have to do with retirement if you're in retirement? Shouldn't you be out of stocks by that point in time? The answer is no, not really. There's actually 3 different reasons why retirees invest in stocks. Number 1 is dividends. You don't have dividends all the time, so you might not want to consider all the stocks. This tells you this is not a stock to consider if you want dividends. Number 2 is going to be growth. Yes, if you're retired, you still need growth. Go back and look at some of my YouTube videos on the bucketing system because you use stocks in this particular strategy down the road. Let's say, for example, if you retired today and you had 30 years that you anticipated in living in retirement, you might need something in year 1 through 10, then 10 through 20, and 20 through 30. Well, in years 20 through 30, growth stocks can still fit into the picture if you're comfortable with that type of thing. So that's the idea. Oh, I mentioned the third reason. The third reason is I think a lot of retirees actually like investing in stocks. Maybe I should say maybe not a lot, but a number of them. There are some people that actually enjoy the intellectual research and looking at stocks. And that's another reason that some people buy it. It's just the same reason that some people buy Morgan silver dollars. That would be me. So yeah, just because you like to collect them, or maybe you collect stamps. Some people collect stocks. Okay, so let's get back to the companies that we're talking about today so that you can keep learning a lot more information. We're going to talk about Charter Communications next. Now, this is an interesting stock, especially when we get into the ESG and the BRI that's associated with it. Remember, ESG is environmental, social, and governance, and BRI is biblically responsible investing. When we get into that, that's going to be something that, well, we got a little bit to report there. Let's just say that. Okay, this is a company that you probably have heard of in another form. It depends upon the place that you are in the country, but Charter Communications goes by the brand name of Spectrum, and they are a cable television company. They have cable TV, they have internet, they have telephone communications. So that's where their popularity is. They're bringing you entertainment, they're bringing you the internet, they're bringing you communications. They serve about 28 million residential customers and about 2 million commercial customers. They were down a little bit today, 0.45%. When we look at the moat for this company, remember the moat is the sustainable profitability. This is the moat. Remember, sorry about that. Moat, wrong. It's the beauty of a live stream. It's happening right now. Once I push the right button, you got the re-education of what a moat is. A moat is the sustained profitability of a company. How good are they at competing with other companies? And when we look at Charter Communications, think about it. Charter Communications does have competition, but it's not an ironclad thing. Charter Communications has an efficient scale and cost. In other words, they're able to internally keep the cost under control and compete with other companies. They also, just by the nature of their business, have a limited number of competitors. Now, they have a narrow moat. That means that they don't have a wide margin for profitability, but they have a for profitability based on the fact that in most markets, there are really only two options available for internet providers or for cable TV providers. So when you only have a few competitors, you don't have to worry about it quite as much. The other thing is they're not worried as much about other coming into the business because it costs so much to build the networks and to be a competitor in this particular business. That's why that they got created as a roll-up of three other companies, including Time Warner. And there's some interesting information about that with the insiders that's going on right now. We want to get into talking about that. You might want to be concerned about that or thinking about it when you're looking at the valuation. When we look at the Charter Communications fair market value, the value is calculated based off of the earnings per share, the same as we did with Checkpoint. But the idea here is that the value is lower than the actual close. Today, they closed at $609.75 per share. It's an expensive stock. But remember, if you own, you can actually own partial shares, which is a good thing. We work with a custodian that's called Folio Institutional, and they allow us to help clients with partial shares. So if you wanted to own a portion of this, you don't have to own the whole stock, but you wouldn't want to just buy one stock. Anyhow, that's another story. The point is that the fair market value is $480. The last close today is $609.75. So that's over top of it. Morningstar rates this as a 2-star company. And remember, the higher in value we go over top of the fair market value, then the lower the star rating. And we're at a 2-star rating right now. There are other people other than Morningstar that think that this company is overvalued as well. And I think that you actually will see in just a moment what I'm talking about there. Now, I want to go back to the volatility of the stocks. Now, just to remind you, the only way to avoid the volatility of a stock is to not to own it. You can't diversify away volatility by just buying other stocks. You can reduce it to some degree, but you can't completely eliminate it. The only way to eliminate it is just to get out of the market or to get into some other type of asset, which has its own characteristics. Remember that the beta of a stock is compared to the Standard & Poor's 500. So what I did here is I threw up the spaghetti graph. I'm showing you. You can see the S&P 500 is the red line, and the blue line is Charter Communication. You can see that they're actually pretty close to each other in volatility, although that Charter Communications is 1.06154. So it's telling me that it's about 6% more volatile than the Standard & Poor's 500. And that's pretty close. You can see that over the past 6 months. So this characteristic works. But it's real interesting when you look at this stock over the past 5 years. The increased volatility has paid off quite a bit. You can see that over the past 5 years, the red line is the Standard & Poor's 500, and the blue line is the stock. They've done quite well over the past 5 years. Again, if you're a retiree out there looking for dividends, this is not for you because there are no dividends. Now, the insiders that are working for this company, it tells you a mixed message. And I hesitate there just a little bit because when I look at the numbers, it's narrow as far as the numbers go. But if we look at the next numbers, which is going to be quantity, it tells us a lot. You can see that there are actually more sellers than buyers in general. There are 16 sellers, and that's just trades. It could be more than one person, or it could be one person doing multiple trades. And you'll see that in just a second when we look at the next slide. But when we look at it from the standpoint of buys and sells, there are more sellers than there are buyers in every circumstance, 3 months, 6 months, and 12 months. But let's take a look real close here at the amount that's being sold. I want to zoom in on this just a little bit. Take a look at this. These are the insiders, okay? There's a lot of money which is being traded, and there are a lot of people. These are executives that work for the company. There are a lot of people that are getting out of this stock. So keep that in mind. If you think that it's overvalued, well, would it be a stock that you would want to buy? No, we don't want to give you, say that this is a direct buy or sell recommendation. But if you were looking at a stock that might be considered overvalued, you'd probably look and see what the insiders are doing. And there's quite a few of them selling. So I think they're taking some profits from that standpoint. Okay. Let's get into the ESG. Now, remember what the ESG is? The ESG is the environmental, social, and governance attributes of stocks. And these are characteristics that are important to people because sometimes people don't want to invest in stocks that go against their morals. ESG and BRI are significant to a lot of people. Now, when we look at the two companies that are involved, there are actually going to be some negatives. So pay attention real close here, because when we look at, I throw this up every day, and if you watch it, just bear with me for a quick moment. I want to educate the people who are new here today. The idea is that if we look at a sector of the economy, and let's say that we're looking at the NASDAQ 100. This is the largest 100 stocks that's in the NASDAQ. You can see by looking at this graph, the companies, the number of companies that are involved in nuclear power, GMO production, weapons, animal testing, gambling, alcohol, pornography. And we want to talk about that just a little bit, because if that's something that's important to you not to have money invested in, then you want to make sure that you're not invested in one of these stocks that we're going to talk about. So let's go a little bit further into it. Okay, I use MSCI as a basis for reporting on the ESG. MSCI is Morgan Stanley, and that it's their international division, and they do a great job of researching companies when you look at their ESG. Their rating on Checkpoint Software Technologies is Okay, we're back. Sorry about that. A little bit of technology issues going on there. So let's get back to what we were talking about when we were talking about the ESG. Let's share that screen with you. Okay, great. ESG is going to be the environmental, social, and governance. When we're talking about Checkpoint Software Technologies, they rate as a double B from MSCI. And that's not a great rating, but it's not a bad rating either. There are companies, if you are really, really concerned about the environmental, social, or governance attributes of a company, maybe this wouldn't be the company for you. But it's not negative. Well, you'll see a negative one in just a few moments. So just bear with me for a moment. When we look at what MSCI is reporting, hold on. Geez, we're just having all kinds of issues here today, aren't we? Let's go backwards. Okay, here we go. Checkpoint Software Technologies. This is the report that gets a little bit more specific of the different attributes that MSCI is considering. When we look at areas that they lag, it's going to be in human capital development, carbon emissions, and they're not taking advantage of opportunities in clean technology as much as they possibly could. And I think that MSCI, from my history of following them, they do a very good job of looking at this from an in-depth standpoint. If this is something that you're more interested in, then contact me and I can help you, guide you into looking at the ESG a little bit more detail. If you're looking for a more friendly stock or portfolio towards ESG, then we can look at it from the standpoint if this doesn't fit your criteria. Now, moving on, let's look at the Inspire Impact Score. That's the biblically responsible investing score that's associated with it. And I give the explanation of this because this is very similar to ESG, except it has the biblical aspects of it. In general, we look at it from a biblical standpoint, the customers, how they work with the community, how they work with their workforce, and this is the company in itself, and then how good of a citizen are they to the world? How well do they treat everyone else that's out there? Okay, now let's look at the score that they give you. I'm not going to go through the specifics of it because I leave this up to, it's so individualized that if you have an interest in looking at companies to invest in that are biblically responsible, reach out to me. You can contact me at van@richardsfinancialplanning.com, and we can set up a time to talk from that standpoint if this is specifically what you're looking at. But I would tell you that Inspire rates the companies on a scale from plus 100 to negative 100. When you get into the negatives, they're going to have negative attributes. When you have positive numbers, they're a positive, biblically based company in general. There's some that are better than others. But when we look at Checkpoint Software Technologies, they have a plus 28. So it's not as good as some, but they're actually positive from that standpoint. So let's move on and look at the other ESG attributes of the other company that we've been talking about, Charter Communications. I will tell you that this is one of the first B companies that we've rated here. We've gone through about 22 different companies over the past couple of weeks, and this is really the first B-rated company that's associated with it. They have a few issues that are going on from a ESG standpoint and from a BRI standpoint at Charter Communications. And yes, they may have made a lot of profits, and it technically on paper may have the potential for more profits. But if ESG is important to you or BRI is important to you, then you want to pay attention to this more specifically. They are laggards in corporate governance and labor management, according to MSCI in their research. When we look at Charter Communications from a BRI standpoint, they're actually a negative 25. When we look at the biblically responsible attributes of the company, it goes beyond the ESG, as we just mentioned, and I think it probably gets into the negative aspects more because as a television provider, Charter Communications does make pornography available on their network. So that's one of the biggest reasons why they're going to get a negative 25. And if that's something that's very important to you, then this would not be a company that you would want to invest in. You might want to look for others. If we consider all of the different NASDAQ stocks, remember that there's only about 8 of them that would be considered involved in pornography. This is one of them. So that's something to keep in mind when we're looking at investing. And if you're interested in the moral aspects of your investments, then that's something for you to consider from that viewpoint. Okay. Moving into the very last home stretch of the day. Sorry for the little bit of communication problems. Hope you stuck with us. The one thing that I want to communicate to you is the same thing that we started with. And remember, the reason why that my company exists is to help you be able to retire without running out of money. And we have specific techniques to help people to do that. If you'd like to learn more about it, go over to richardsfinancialplanning.com. And I think it'll explain quite a bit there. I've got quite a few different articles that I've written that'll help explain it. And just the opening page, I think, will explain it too. If you'd like to set up a time to talk to me about your particular situation, go down to the button that looks just like this one that says schedule a call to learn more. Click on that button, and then you can actually set up a time where you and I can have a telephone conversation about your situation, and you can ask whatever questions that you want. It's brief, but it's to the point, and it's free. So take advantage of that, and I would look forward to talking to you. And with all of that, I'm going to end it for today. And thank you for taking the time to visit with us. And following this, there is a disclosure that's real important. So everybody have a good day. And hopefully with the hurricane coming, we still broadcast on the other days of this week, but we'll just wait and see. Have a great evening.